John, thank you very much. This is a wider than expected loss for the second quarter for Rivian, the company losing 80 cents a share. The street was expecting a loss of 65 cents a share. Revenue roughly in line with expectations, coming in at $1.3 billion. The company, after two straight quarters of a gross profit, swung to a gross loss, if you will, $206 million in the second quarter. No change in the full-year delivery guidance, still expecting to deliver between 40 and 46,000 vehicles, but it is widening the full-year loss that it expects now to a range of $2 billion to $2.25 billion. Previously, the company expected a loss of $1.7 billion to $1.9 billion. Let's bring in RJ Scaringe, the founder and CEO of Rivian, joining us from the company's facilities out in Palo Alto, California. RJ, wider than expected loss for the full year is expected. Why is that?
Yeah, well, thanks, Phil, for having me on. As you said in your opening statements there, in Q2 we had lower production than what we had planned for. And really the big driver of that were some of the big changes we've seen in terms of trade policy. And so that affected us directly with the heavy rare earth metals being controlled in terms of exports out of China. And that had a very significant impact on our overall production volume. And related to that, we saw the overall supply chain endure a lot of change and a lot of uncertainty. And we felt that a number of constrained suppliers actually led to our production going from Q1 of over 14,000 units to Q2 around 6,000 units. And so that significant drop is what drove the numbers in Q2, and we see that play out across the full year numbers as well.
Well, that's my next question. I mean, we're not going to see a resolution with China. At least it's not expected anytime soon. Yeah. Are you going to have trouble getting the rare earth metals that you need, which are so key to the components within your vehicles?
Yeah. Well, I'm glad you asked. We spent the second quarter really working hard to come up with the right solutions across our supply base. And, of course, key among those is the heavy rare earth metals, which are necessary to make the electric motors that go into the vehicle. And given that 100% of our vehicles are produced in the United States, and given that 100% of our vehicles are electric, this export control on heavy rare earth metals is particularly impactful to us. And so we developed a range of different solutions over the course of the quarter that have allowed us to have confidence that Q3, Q4 are going to return to much higher production levels and ultimately allow us to produce more vehicles in the second half of 2025 relative to the first half of 2025.
You're in the back, behind you is the R2 next generation model that you guys go into production with early next year. Is this shortage of rare earth metals likely to postpone that at all, or do you still believe you'll hit the production target that you have put out there in terms of starting production?
No, I mean, we couldn't be more excited about R2. In fact, I've never been more bullish on a product that we've developed than I am on R2. It's the packaging, the product market fit, the pricing, importantly, the cost that enables the pricing. Vehicle starts at $45,000 is really, really exciting. And so in order to make sure that this ramp is smooth and successful, a key focus for us has been the supply chain. And within that, of course, looking at some of the changing dynamics around certain materials, in particular heavy rare earths. And in the case of the heavy rare earth metals, we've really thoughtfully sourced those materials and also done it in a way that protects us in the event that we see some of the same export challenges.